Hello Christians and warriors, welcome back to the Christian Market Watch. Today we have a lot to cover. I have a lot of important and urgent critical news to share with you, so please stay to the end. On Tuesday, Australian time, really early, about 6 a.m. in the morning, that was when the SP 500 in the US has officially dropped into bear market territory. And that means that out of the major indices that are the indicators, the Nasdaq was already in the bear market territory and now the S&P is. And that was a red alert signal for me. The US Treasury rose sharply, as you can see right here in this graph right here. It rose sharply all the way up and spiking in this really unstable manner. And that really indicates a lot of instability in the debt market as investors pull their money out of the US 10-year Treasury and try to put it anywhere else. But what we're instead seeing, instead of the money moving on to other assets, we're seeing a pan sell-off. That means everything is on discount. Everything is selling off. No matter which market it is the stock market, the bond market, even gold and silver were affected. Cryptos were definitely affected. They were all affected and everyone was selling it all. And you're like, okay, if they're all selling, then what happens to the money? And the answer is people are keeping cash instead of investing in any of these other assets because they are fearing what is actually happening to the stock market at the moment. Let's take a look at the indices. Onto Australian ASX 200, it's actually 6,600 at the moment, and you can see it's definitely experienced a very sharp drop. If I just zoom out a little bit here for you to see, but it's still not at the bear market levels yet. What we're waiting for in the ASX 200 is a number 6,010. So when it drops to pretty much $6,000, you know that the ASX, the Australian stock market, is in bear market territory. And on the left here, we have the major indices provided by CNBC. Thank you. So as we can see, the S&P 500 is now at 3,752, and we know the bear market number is 3,856. So S&P 500 has dropped into bear market territory since about 2 days ago, and it has not climbed out of it yet, unfortunately. So we are expect to see a lot more movements following the Federal Reserve's interest rate announcement this afternoon in US time, so probably tomorrow morning for our time. Onto the Nasdaq really quickly, it's now at 10,832 and the bear market indicator was about 12.8 grand. So you can see where that yellow level is in that little line right here. That's about where the bear market indicator is for that, and we can see we're much further down and with no upside, even though there was a slight change, 19.2 points since the last time it closed, but we know that's way off what it needs to be for the economy to give us a signal that it's getting any better. Onto the Dow Jones Industrial Average, and we know that the Dow Jones are basically the blue chip stocks in the US economy, and right now we are at a level about 30,488. The bear market indicator there is about 29,439. So we're about 1,000 points away from the Dow becoming a bear market. We are really keenly watching that to see how much this would change post the Federal Reserve's rate announcement later today in US time, so later tonight, Australian time. Bitcoin at the moment is pretty much half of what it used to be, or less. Well, it's definitely less than half of what its all-time high is at about 60 grand, but it's about half of its worth at January this year. So we're definitely seeing a lot of pain right there. And also, I just want to announce real quick, in case you haven't heard, that Celsius is having a liquidity crisis. Being people who have staked their Bitcoins or other cryptocurrencies have been wanting to withdraw it all of a sudden. Maybe they want to convert it to cash. But basically that's caused a lot of liquidity issues because a lot of that has been locked into long-term loans in mining, liquidity mining, and other different types of loans that they have. So Basically Celsius has been trying to come up with more Bitcoin to pay off the debt and put more collateral in, and so a lot of Celsius users, myself included, we have been paused and suspended from being able to withdraw any Bitcoin or cryptocurrencies from our accounts. So yeah, so that's definitely one to watch out for, because if the Bitcoin price currently drops below 14,000 plus, I think, per Bitcoin, then Celsius might be forced to liquidate a part of its holdings, and that means a lot of losses for us and all of the other investors. Celsius being one of the largest crypto investment platforms out there. I'll definitely keep you up to date as to what's happening with Celsius as well as Bitcoin, and also what will happen with the Federal Reserve interest rates. Once they announce it, I'll be soon to let you know. On to a little bit of better news. China's economic numbers came in a little bit better than expected. Its industrial production has rose very, very marginally, and fixed asset investments seem to be doing okay. It rose by 6.2%, which is actually higher than its expectations. However, China's still warning everyone that the international environment is very complicated and that there are a lot more challenges with the recovery pending. So yeah, so it's good that at least these economic numbers have come in. It's a little bit of a sigh of relief for the investors. However, we need to keep a keen eye on where everything is going. So what is happening right now is that everyone's pulling their money out of the stock market and keeping it as cash, which is another asset, as we were mentioning a while ago. And probably, if you have been listening to Warren Buffett, he's expecting the stock market to be at a 50% discount, which means there's a lot more to drop yet. If the bear market indicator is 20%, then as it hits towards the 50%, that's sort of what Warren Buffett is expecting it to see. I was watching another podcast by Jeremy Grantham, and he's saying that the stock market is about 65% overinflated. So, between 50 and 65% is what all of these people who've been in the economy for a long time, they're sort of expecting it can drop to. So a lot of people are unfortunately going to lose a lot of their wealth. So the best idea right now that everyone has, and Warren Buffett himself is actually doing, is he's keeping money aside as cash and not using it to invest in the markets right now. And he's just patiently waiting until everything is at 50% discount, and then he will go in and buy it up. So this is a strategy that they are thinking about adopting, and we can learn from that a little bit. Anyway, that is all I have to say for this update, and I will keep you short, sharp, and updated if anything changes in this environment, and especially about the Federal Reserve interest rate increase. If you want to be updated, remember to subscribe. Let's see how much it actually increases by. I will see you in the next video.